Well, good morning, everybody, and welcome to this month's Breakfast Networking event. My name is Kyle Burgess. I'm the board chair with the Newmarket Chamber of Commerce and a senior employment lawyer with Minkin Employment Lawyers. I want to begin our meeting in a good way by acknowledging the land that we live and work on. This is an important step on our path of truth and towards reconciliation, which is the work of all Canadians. I want to acknowledge that we are on the traditional territories of the Wendat and the Haudenosaunee and the Anishinaabe peoples, whose presence here continues to this day. We also would like to acknowledge this is the unceded treaty lands of the First Nations of the Williams Treaty, and thank the signatory nations respectively for sharing these lands with us. We would also like to acknowledge the Chippewas of Georgina Island First Nation as our closest First Nation community, and we extend the hand of partnership to them so we can live in a good way in accordance with our treaty agreements. I would also like to acknowledge the following board members and dignitaries that are in attendance this morning. Our very own vice chair on the board of directors, Shauna Fardy with Sun Life Financial, and of course, town councillor Bob Quappies. Thank you very much for joining us this morning. We would also like to announce the Newmarket Chamber has welcomed 7 new businesses to the chamber membership this past month, and we would like to acknowledge those who are in attendance with us today out of those new membership. Chris Tulk from Mac Digital Marketing. Thank you, Chris, for joining us this morning, and welcome to the chamber. Thank you to Pierre Bonhomme from Chagers and Bonhomme Chartered Professional Accountants for sharing with us at this morning's breakfast networking session. We will be hearing from him very shortly, but first, before we do, I want to pass the virtual mic over to Abdus to provide a chamber advocacy update. Is Abdus with us already here this morning? I didn't see him as I started.
Yeah, I don't see him yet. I'll
well, look
see
at
if
that.
he's still coming, but maybe we'll go to him at the end.
All right, I'll hang on to that virtual mic then for a moment. As long as Pierre, you're good to go. Jumping forward to you in the timeline here for today.
Anytime.
Excellent. All right, well, Pierre.
And they didn't hear, so it's like, oh, good.
That's good.
Oh.
Yeah.
All right, if I can just ask everyone else to make sure they're muted their microphones so that while Pierre's doing his presentation here, we can only hear Pierre. Without further ado, Pierre, I'm handing over to you.
Fantastic. Well, welcome everybody, and I'm glad to see so many people are interested in taxes and tax returns. It is tax season. The most wonderful time of the year, I guess, for some of us. George probably would concur, but so what we're going to talk about this morning is getting ready to file your 2021 tax return. Now, what we're going to go. So what do I need to file? So obviously different people have different backgrounds, different scenarios and situations. So what is it that you need to file? When do you need to file it? When do you need to pay? What information are you going to need either to file your tax return or to provide it to your accountant so that they can file your tax return? New for this year are COVID-19 considerations. So obviously with the benefits and all of the subsidies that have been available, there are some changes to the tax landscape. What can be deducted for business? We are the Chamber of Commerce, so I'm going to assume most of us here are business or have a sole proprietorship. Common personal deductions that you should be aware of that most people can take advantage of. How to stay out of trouble with CRA. What to do if you're being reviewed or audited, and then what not to do. And then if there's any time or if anybody has any questions, we can ask some questions, but feel free to unmute yourself or to post any questions in the chat. Tyler, if you can let me know if there is any, because I've got my screen sharing, so I mean.
Absolutely.
So what do you need to file? Well, if you're a sole proprietor, you got to file a T1 personal tax return with the appropriate schedules, which is a T2125 statement of business activities. If you're an employee, you're going to file a T1, and then if you have employment expenses, you'd be filing what's called a T77 statement of employment expenses. If you're doing that, you need to get a T2200 signed by your employer, and that's basically conditions of employment, which basically states that as an employee, you have to incur expenses in order to do your job. If you're a partnership, so again, you can have a partnership of people or corporations. If you're a person in a partnership with someone else, you're still filing a T1, still filing a T2125. However, you're declaring it as a partnership, and then you're recognizing your proportion of the revenue and expenses on your tax return. If you're a corporation, you're filing a T2 corporate tax return. And then obviously there's HST considerations for anybody making over $30,000 a year or are HST registered if they chose to register if they're under that mark. When do you need to file? Well, personal returns, April 30th. It has been since before you were born. It will continue to be that until after you're dead. I don't know how many times I get the same question every year from people. Hey, when's tax filing deadline this year? April 30th. It's always April 30th, unless you're self-employed, at which point your tax return is due June 15th. And then for corporate returns, your filing deadline, if you're a Canadian controlled private corporation, which most of everyone here are, you have 6 months to file after your year-end date without a late filing penalty. And then for HST, there's a bunch of different ones. So if you're a self-employed HST with a yearly filing, it's going to be the same deadline as your personal return, which is June 15th. If you're self-employed quarterly filer or monthly filer, then those are due 1 month after the quarter end or the month end. If you're a partnership, you have till March 31st. If you're a corporate yearly filer, 3 months after the year end. And then if you're a corporate quarterly or monthly filer, same thing as a personal, you're 1 month after the filing period is ended. When do you need to pay? So this one's a tricky one. So personal returns, April 30th. If you're self-employed or a partnership, even if your filing deadline is June 15th, you still have to have it paid by April 30th, or they start turning the interest tap on. Which means, and the reason they do that is if you're self-employed, they assume that because for everybody that's self-employed and personal, your calendar year, your fiscal year is always the calendar year. So you should probably know by April 30th if you made money or lost money, and you should know whether you're going to have to make a payment or not, and they want that payment by April 30th. A corporation, you have 3 months after the year end date. Even though you have 6 months to file. So kind of same thing where you have 6 months to file it without a late filing penalty. But if you have a balance owing, you have 3 months to pay. That's if you're a Canadian controlled private corporation and your income is below 500,000. Your taxable income is below 500,000 in the prior year. If it's not, then you have 2 months to pay before they start turning the interest on, but you still have the 6 month filing deadline. For HST, self-employed yearly filer, April 30th, even though the filing deadline is June 15th again. All other yearly filers is 3 months after the year end date. So basically, if you're a calendar year self-employed, you have till March 31st. And then quarterly and monthly filers 1 month after the filing period. So kind of the same thing as when your HST returns are due. So what information do you need to file? Well, if you're doing electronic bookkeeping, so QuickBooks, Simply Accounting, FreshBooks, now there's a bunch of different online platforms. Basically just backup copies of the information that you have, or you're going to provide your account with your trial balance or your income statement. If you're self-employed, really all you need is the income statement, because CRA really doesn't care about your balance sheet, because to them, all of the money you made, all your expenses are all personal. There is no distinction between you and the business. You are the business. It's not like a corporation where it has a separate, distinct balance sheet, assets and liabilities that it incurs. Summary of sales and expenses by category. So self-employed business summary. So something that we provide to our clients, and it's available on our website. Where'd it go? Second, just loaded. Went to another screen. Of course, it's not. Give me 1 second. So,
Yeah, are you trying to share another screen?
No, is it? Are we? Is it up? Can you see that?
Your presentation is up right now.
Oh, it's still the presentation. Okay, so I'm sharing the presentation, not the actual screen. Give me 1 second.
Right. Yeah. So you'd have to close, stop sharing your screen, and then select share screen again to select a different window to share.
I got it. So we usually provide something like that. So basically it's just something for people to organize their information when they're filing for personal tax return as self-employed. So you're going to basically summarize your income, your any returns, home office expense. Obviously, if you're self-employed, you're typically working out of your house. So you get to deduct a certain percentage of your house. Most people do it by square footage. So if you have a 2,000 square foot house and you got a 200 square foot office, then that's 10% of your total heat, hydro, water, sewer, insurance, general maintenance and repairs, mortgage interest, and property taxes of the home. And if you're renting, then the rental portion that you're paying. And on the expense side, right, if you're providing goods, then you're going to have cost of sales because you're buying and selling inventory. And then a bunch of different expenses. Now, obviously, there can be more, but this is the most popular group that people will have. You're likely using a vehicle, so you got to summarize. And again, that's a personally owned vehicle, typically as self-employed. Whether you own or lease it will decide on what type of calculation we have to do in terms of allowing, because if you own it, then you can deduct only the interest as an expense and a percentage of that. Whereas if you lease the vehicle, the leasing cost, depending on the fair market value of the car, the MSRP, there is a clawback and a calculation that has to happen, but then you're getting a percentage of your fuel, maintenance, insurance, licensed registration, interest, parking charges, tolls, and that'll be based on the total kilometers. So you have how many kilometers did I put on the car, how many did I drive for business versus personal, and you get deducted the business portion, and then any purchases of assets that need to be depreciated. Okay. That. And then another form that's helpful that our clients also like. This is just a personal income tax checklist that we provide. So just basically a summary of do you have any dependents, married status, information slips that you may or may not have received. So it's just a good exercise to go through it and go, okay, did I get one of these? Or should I have one? I haven't received it yet. And then official receipts, so charitable donations, political donations, professional dues, disability tax credit, tuition, and then other information. So, list of self-employed income. Have you bought and sold a property? Do you have any rental properties? Have you participated in a tax shelter? Hopefully it's not a charity or an art one where you paid $10 for a piece of art and you're getting $1,000 charity return, because that's a fraud. So don't get involved in those. If it sounds too good to be true, it always is when it comes to taxes. Carrying charges, did you buy and sell stocks? Support payments or alimony. So if you've gotten divorced, childcare expenses, moving expenses, medical expenses, property taxes, installment payments during the year that you've made, and then you want to be registered for voting for and the kind of the rent. So then let's go back to the presentation. So that's the information that you either are going to need to prepare your tax return or that you're going to need to provide to your accountant. One thing that we always recommend, if you're going to see a new accountant, always give them a copy of last year's tax return, just so that they can, one, compare what you've provided this year versus what you had last year. And then it just prompts them to be able to allow the question of, well, hold on, you had a T5 slip from an investment. Why do you not have one this year? Oh, well, I sold the investment. Okay, well, then I need to know about the purchase and sale. Or why do you not have that slip? Is it just late or is it missing? Just prompts you to be able to ask that question. COVID-19 considerations for this year. So anybody who received a benefit, you're going to get a T4A or a T4E, depending on whether you got it through employment insurance or whether you got it through direct government subsidy applying directly with that benefit. There's the CRB, the CRCB, the CRSB, the CERB, and the CESB. So a lot of different programs out there. Now, one thing that is becoming apparently clear is a lot of people applied and they didn't qualify for it. So we're seeing a lot of benefit repayments happening in 2021, and they're going to be going forward in 2022. And that'll either cover for 2020. Now, if you had to repay 2020 benefits in 2021, you have a choice to either deduct those repayments on your 2021 return, or you can have them carried back to your 2020 return and have that tax return reassessed. Obviously, there's a little bit of a arithmetic exercise to do to figure out which period it's best to have those deductions in. Obviously, it will lower your income, and you want to have it claimed in the period where it'll either increase your refund or decrease your taxes, whichever one is more beneficial. So if you're in that situation or you know anybody, they'll just have to do a little quick calculation to see what period is it more beneficial. That's on the CRCB, CRSB, CERB, and CESB, because those are by period. The CRB, the Canada Recovery Benefit, most people didn't know that, but they're going to require a payment of 50 cents for every dollar of net income that you made in excess of $38,000 in 2021. Now, the net income for the CRB also includes income from the CERB, the CRCB, and the CRSB, but not the CRB itself. So if you made over 38,000, so a lot of people claim for these because they were off for a certain period of time in the year, but they still made $60,000 for the year. They're likely going to have to pay all of it back. And unfortunately, that wasn't very well advertised by CRA at the beginning of that program. So I think there's going to be a lot of surprises when people file their taxes this year. And again, this one is by your income for the whole year, whereas all of the other programs is determined by the filing period. So they take a look at, okay, well, for that 2-week period, you had to have made less than $1,000 to qualify. So they look at those periods distinctly versus, like I said, that CRB is on a yearly earnings. And then we also have the work from home credit. So they introduced that last year in 2020, where you got $2 a day. Last year they capped it at $400. This year they increased it to $250 or to $500, sorry, which means you get $2 a day for every day that you stayed home. Again, you have to have to qualify for that, you're going to have to get a T2200S, which is a simplified version of that conditions of employment, which basically just states that your employer is attesting that you couldn't come to work and you had to work from home, and then you just basically calculate how many days that you had worked from home, and it's a very simplified credit, but very easy one that people will qualify for. So what can be deducted for business? Get that all the time. So basically any expense that you incurred in order to earn the income from the business, you can deduct against that income. Now, however, and I'm going to give 2 examples of that, the expenses need to be reasonable and justifiable. And the examples of this is, one is a wrapped car for advertising. So, and these are real scenarios where I had a chiropractor who was on her message board and said that one of her colleagues had decided he was going to write off 100% of his car because he got advertising put on his car. And to him, that turned his car from a vehicle to a billboard, and therefore he should be able to deduct all costs with it. Well, I'm sorry, but that's just ridiculous, because the car is still a car. You can deduct the cost of wrapping the car, but it does not change the fact that it is still a vehicle and it's going to be treated as such for CRA. Second example was I had a client who all of a sudden, he was a small contractor and had an $80,000 generator on his books, to which I was like, dude, you do like little tiny renovations. Why would you have bought an $80,000 generator? What is it exactly? And then he let me know it was his boat, to which we said, okay, again, not reasonable for you to buy a boat for a small contracting business. However, we may be able to write off a portion of the boat because you do some lake only access cottages, which you're going to use the boat for business. But again, reasonable and justifiable. You're never going to argue with CRA that you had to buy $100,000 bayliner to work, to do some construction work, to haul some material. So again, it's got to make sense, because if CRA comes asking the questions, you got to be able to defend that position. Home office use, so must be based on square footage of the home. We went over that when we went over that schedule. So determined by square footage or other justifiable manner. So the other justifiable manner that CRA will typically allow is, there's 8 rooms in my house and I use 1, so 1/8 of the house. Now, they prefer the square footage because it's more accurate, but as long as it's reasonable and justifiable, again, they have to accept it. Car expenses. So in order to deduct car expenses, most people don't do this, but you're supposed to keep a vehicle log to track all of your business trips. And you basically, January 1st, you write down, here's my odometer reading at the beginning of the year. And then you take another reading at December 31st. And then you track all of your business use so that you can basically report that to CRA. There are some great apps that will help you do that are electronic, that basically as soon as you get in the car, you hit the I'm on a business trip button, and it will track through your GPS on your phone where you went and how many kilometers you did. There's Mile IQ, Trip Log, Driver's Note, Log Book Me. There's likely a slew more of them at this point that are available. You just basically find one that's good for you, or you can basically just do the old school, write it down or keep an Excel spreadsheet. And then same thing, you got to track your fuel, interest and lease costs, insurance, licenses. And then unfortunately, you can't claim fines or parking tickets. You can claim the cost of the parking that you paid for parking, but if you chose to not pay and then you get fined, unfortunately, you can't claim that because you're not allowed to claim any fines or parking. So speeding down the 404 because you're late for a meeting, even though you're late for a business meeting, does not count as a business expense. So common deductions on your personal return. So union, professional dues, childcare expenses, moving expenses, support payments, interest and fees to earn investment income. So if you've borrowed money, so if you've leveraged yourself, right, you have a line of credit on your house that you use to take $100,000 and put into the stock market, you're allowed to deduct that interest. You have to track it separately, but deduct that interest against any income earned from that investment. Caregiver tax credit, student loan interest, medical expenses, donations, RSPs, tuition, disability tax credit, and then the climate action incentive. So something that's also changed for this year. So for 2018, 2019, and 2020, they had phased in that carbon tax, climate action incentive tax credit. Last year it was $300. That's no longer refundable with the tax return. So when you file your tax return this year, you're not going to get it back. They've changed that to a quarterly payment that will start in July of 2022. So you're not that's going to be gone this year. So a lot of people, if you didn't know about that, they're going to be like, how come my refund's lower this year than it was the last 3 years? That's why. And then how to stay out of trouble with CRA. Well, first and foremost, file on time. Because if you're not, then you're getting on the radar. The last thing you want to do is be on the radar. Pay on time, obviously. File even if you can't pay. File even if you don't owe, because you can be missing out on refundable tax credits and the Trillium benefit and the GST, HST credit, because they won't give you those unless you filed. And then, just be organized. Electronic bookkeeping is great help. And then keep your records for 7 years, because CRA can come back for 7 years to audit you. And then what are you going to do if you're being reviewed or audited? Well, one, don't panic. Two, remember that our tax system is based on a self-assessment system, which means CRA sporadically and periodically will send out just review letters to basically keep people honest, because you have all of the information. The only thing they have are copies of your T-slips. So when you're saying, hey, I've got all these expenses, they don't have copies of those. They don't know. And people always get mad. And I tell people, you don't get mad because they're asking you questions, because you have all of the information. You're filing. We basically in Canada are on the honesty system. And unfortunately, a lot of people are not honest when it comes to filing their taxes. It doesn't mean you did something wrong. Respond with a clear and supporting documentation, and then consult with a professional if it's a complex matter, or if you don't think that you can win, or you want some support, right? Just as a quick thing, we get about 100 requests for information from CRA per year on various, so T1s, T2s. Just basically them, spot checking people, going, hey, you claim these medical receipts, send me copies of medical receipts. You claim donations, we want, and it's just a random system. I'm going to say this in terms of as a business though. So when you file a T2125 business return on your personal return, you have to declare what's called a NAICS code, which is the North American Coding Information System, which basically tells them what type of business you are. Because everything is electronically filed now, what they do is they basically, as a percentage, compare your business and all of its expenses compared to everybody else in that industry. And if you're over in terms of your expenses more than everybody else, your risk of being reviewed or audited went up, because they basically look at it and go, well, hold on, the industry average on expenses this, why is this person higher than everybody else? Obviously they're doing something different, and let's just go have a look to make sure that they're not overinflating some of their expenses, and everything they're claiming is allowable. What not to do, don't ignore them, because they're not going to go away. And yes, just be careful. There's a lot of fraud letters going out, and they're getting really good at them. Don't get mad at the agent. They're just doing their job like everybody else, and they're right. Getting mad at them is not going to help you. It will actually make things worse, because now you're going to piss that person off who's trying to, and then when they come and review your information, they're going to be less likely to be favorable. And then don't incur any unnecessary expenses to save taxes. And what I mean by that is, I get a lot of people going, oh, I owe, $5,000 to the government. Should I go and spend, $5,000 on to lower my taxes? And my answer to that is always this: you don't spend $1 to save 30 cents of tax, because if you didn't need that equipment, or if you didn't need that item, you've just wasted $70. Pay the 30 cents or 35 cents and keep the remainder in your pocket. You're further ahead. You don't basically spend to save money unless it was something that you were going to spend and it was just a timing of do I buy it in this fiscal period or next fiscal period. And then there's just a summary of the 2021 and 2020 Ontario personal tax bracket. So on the first 45,000, 20% income tax; from 45 to 49,000, 24; from 49 to 79, 29; 79 to 90, 31%; 90 to 93. Now you notice how we have these stupid little tax brackets where you have these very small increments. A lot of provinces don't have that. That's because Ontario, in their glorious wisdom, decided to set their own tax brackets and not match their tax bracket to the federal brackets. So what ends up happening is you have the federal tax bracket goes from here to here, and the provincial one goes there, and then, which is why you get these small little gap numbers that are just kind of silly. And that's pretty much it. Any questions? I know it's a lot of information all at once.
Yeah, quick question, Pierre.
Hey, Chelsea.
How are you? So because of COVID, obviously, for client stuff, typically, take clients out for lunch, that sort of thing. And I know the CRA can be a bit sticky with gift cards. So is that something that I can still do for clients in terms of things are changing now, but can I purchase gift cards to a local restaurant for them and claim that as a business expense?
You can. You just need to be very. So they don't like gift. They don't. Yeah, gift cards, because they're cash.
Yeah.
Is very sticky. So you basically have to mark down how many gift cards you bought and then who you gave it to,
Okay.
so that they could basically, if they wanted to, they can spot test those people, give them a call, and basically say, hey. And then that'll appease them. The issue with most people that are giving gift cards is they don't actually give them away. And then when CRA comes out knocking, they're like, well, I just gave them to a bunch of, okay, well, give me a list so that I can call them and verify it. Oh, well, right. And then they stumble. So as long as you're actually doing that and you have it well documented, then you'll be fine.
Awesome. Okay. Thank you.
And I guess that's another thing that a good point that you bring up that I didn't mention is, obviously 2019 was our last full year of operations normally, and then COVID hit in basically March of 2020. CRA is still looking at right, if your travel expenses, meals and entertainment, anything like that hasn't really dropped and you're at the same level, unless you're like a trucker who's actually having to travel, you couldn't go anywhere, you couldn't go out, you couldn't entertain your clients. So there's a reasonable expectation on their part that it's going to dip. And if it hasn't, or if it's gone up, again, they're going to say, well, hold on a second. How's that possible? You physically couldn't go see your clients. You couldn't drive anywhere. How is it that your vehicle costs or your travel costs have maintained or increased? So just something to take note. Any other questions? All righty. Well, thanks a lot for listening, everybody.
Here, thank you very much for that. That was fantastic. Some great information in there. What we're going to do now is actually Chris Emanuel is going to give our advocacy update for us here this morning. So Chris, if I can pass it over to you.
Thanks, Kyle. And apologies, Abdus couldn't be here today. I'll give a brief update, but also I think it's important to note too that today is International Women's Day and special celebration to all of the women that are here and working hard in the community. And we're very fortunate to have such an amazing group of women that work at the Chamber as well. So I'm very fortunate to work with this team. We are celebrating the event tomorrow formally, though, with our event at the New Roads Performing Arts Theater. And also, I just want to shout out to, we've got in April, we've got an after hours event as we move towards things in person. And later in April, there'll be our mayor's luncheon is moving back to the springtime. With respect to advocacy, we had a pre-budget consultation with our Member of Parliament, Tony Van Byen, which some of you were able to join. We've been very vocal on that, on ways that the federal government can be supporting business. A lot of, I think, tangible items came out of that, specifically around, and I know you're spoke to, a lot of businesses receive support in the way of loans from the government, et cetera. But we're also cognizant of the fact that many businesses are going to be facing a lot of debt and how they're going to be able to repay. And while the federal government did extend the deadline for repayment of some of those loans, we have asked that they give consideration on what the criteria would be on forgiveness of loans for those businesses that are just that hard hit. There needs to be criteria. We should know that well in advance so that businesses can plan accordingly. Beyond that, we did do our provincial pre-budget consultation a couple of weeks ago. That budget date did move up again. I believe the province is announcing that in April, and we'll continue to make sure that we work hard to make sure our members' voices are heard. So that's our really advocacy update in general, and we'll keep everyone updated as we roll out different initiatives and events going forward. Thanks, Kyle.
Perfect. Thank you very much, Chris. All right. So now we're at the networking portion of our meeting this morning. If you're able to stay on, we'd love to have you do some relaxed networking online here. And I'm going to pass it over to Tyler, who will explain what we're going to do and put us into our rooms.
Great. Thanks, Kyle. I'm just going to stop the recording here.